I would create, I would, I was known to be a very creative problem solver. I
Mm-hmm.
remember how I described, computer science as
Mm-hmm.
creative problem solving. That's how I viewed finance. So I'll give you an example. The best way to do this is
Give
illustrate by
example, yeah.
example. So, back in, I want to say maybe 2005, there was a oil pipeline company called El Paso, right? They were very levered, and they had a 1 year convertible that was about to expire, and it was trading, call it at 90 cents on the dollar. They had a 10% yield to put. My analyst, analyzed it. There was all the senior secured debt above it, and he just proposed it as just an outright long, right, to just capture that 10 points to the put date. And we discussed it, and looking at the capital structure, I noticed that, okay, well, there's a senior secured revolver above that convert that was yielding, maybe call it 8 or 9%.
Mm-hmm.
There was also a pari passu uh, uh, long duration piece of debt that was trading in the 70s that had a much later maturity date. And so it occurred to me that, what if I did this trade? What if I shorted that convert at 90 cents on the dollar,
Mm.
went long that long duration paper at
Mm-hmm.
78 cents on the dollar, and then at the same time went long the senior secured revolver? Now, why would I do this? It sounds very complicated. What I created was effectively a synthetic event option. Okay,
Mm-hmm.
so here's my thinking.
Mm-hmm.
If El Paso is very levered, if they went bankrupt, right, the convertible, the short term convert that was being artificially held up at 90 cents on the dollar
Mm-hmm.
would converge to that long dated convert, that long dated long bond at 78 cents on the dollar. You see,
Mm-hmm.
because in bankruptcy,
Mm-hmm.
duration mismatches don't matter; they all equilibrate, right?
Mm-hmm.
So I make money in a bankruptcy. And by the way, in a bankruptcy, I'm still long that senior secured piece of paper at
Mm-hmm.
8%.
Mm-hmm.
That's rock solid. I'm going to clip that coupon no
Yeah.
matter what. But there were rumors that Chevron Texaco might buy this company.
Mm.
If they bought this company for stock, presumably, right, it would be an incredible home run, because my my the convert that I was short was puttable and callable at par, meaning that it could only go up to par. I would only lose about 10
Mm-hmm.
points on my short. But the senior bonds at 78, right, would all of a sudden become single A credit, which
Mm.
meant that under Chevron Texaco, if they bought them, those bonds at 78 would go up to about 120. It'd make almost 50 points on my long
Wow.
bond. And senior secured still clips that 8%. So I had a portfolio that had all these different types of setups like this. And I always told my clients that, you know what, it's impossible to predict when some of these event options happen, but when they do happen, they're
Mm-hmm.
very, very asymmetric, and there's almost no downside. There's almost no
Yes.
possible way for me to lose money on these trades,
That's, yeah.
right? Now,